a problem for the actual shorts on Upstart because now a lot of that put wall has weakened, so they need to strengthen it or they need to allow the price to start moving up, which ruins their profitability, right? Um, here's what I think is going on with Upstart and why it ended up on Reg Show. I think Upstart at 400 was obviously extremely overvalued, right? And this was into last year. Upstart was trading at just insane multiples, right? So this is an extremely attractive short, right? As it started coming down and they started performing a little worse and conditions got worse, it became more and more attractive to keep piling into shorts on Upstart. And, some shorts took profits here and it kind of. Let me just pull the chart up because it's easier to show you. All right. So, obviously this was an extremely attractive short and it kept being shorted very actively all the way down. And we see some short side capitulation here and here where, or profit taking, right? But still, with earnings looking worse and worse and the macro environment looking worse for their sector, more shorts keep piling in, right? And what happened is, they kind of ran into a wall right around here, where so many shorts had piled in, and so many synthetic shorts had piled in, coming in to short the volatility, that Upstart and its primary ETF bots were both reg showed on the same day. So they both hit their reg show limit on the exact same day. Over the next month or so, as we know, bots was cleared off reg show, then eventually Upstart. But what hasn't happened on Upstart is shorts haven't taken their profits yet. And there's a lot of them, right? And kind of the first one to go to take profits is going to lead to a pretty drastic bump in price, right? Um, and since they've shorted it for so long, calls have been extremely cheap, and synthetic long positions have also been cheap, right? And this encourages call buyers to start coming in and stacking the options chain. So now they have shorts underwater, but if they cover their shorts, the price is going to rocket because there's so many calls on the chain. So they're trapped. Um, I expect that if Upstart runs again, they will remain trapped. And it will go back on Reg Show. Um, this is very similar to the situation that was occurring on GME in 2020 in a lot of ways. It's missing a lot of the FOMO, but Upstart's ETF FT, like their FTDs and their ETF FTDs have both been very, very high, very elevated through the last several reporting periods, continuing to gain momentum, right? And so either they cover their shorts or they try to ride it out again. If they try to ride it out another quarter, they're going to be in an even worse spot. They're going to be on Reg Show again. So what happens is, eventually you push it onto Reg Show enough times, and the time it's on Reg Show keeps extending because it becomes harder and harder to clear it off of Reg Show, right? And once you've extended Reg Show enough, that Reg Show now falls onto an OPEX period where you have to cover synthetic liquidity. This is where you run into a problem. So if you can keep the synthetic liquidity recovering in between Reg Show listings, you're fine, right? Because you get liquidity in here and then you can short back again, right? But if you get liquidity during the period it's on Reg Show, everything goes boom. Because now you've run the price up with the inability to short it. And this is what happened to GME in a lot of ways. A big part of what happened to GME in January of 2021. And it happened on a lot of stocks, right? Because, a lot of them were on Reg Show at the time and cycling onto Reg Show and losing. They were out of liquidity, right? The borrow rates skyrocketed and the synthetic short positions moved up, and everything looked like it was 80% short because they were reporting synthetic short positions on those stocks, right? So it's very tantalizing, but I mean, obviously there's ways out. It doesn't have to necessarily play out the way we expect it to. But if it does, it's extremely bullish.